We've got Eqstra next. Well, I'm always slightly confused as to how this exactly should be pronounced, because I do know that some people pronounce it Eqstra and some people even call it Eqstra, like they're in the horse business. But it's not. It's a diversified leasing, industrial, construction and mining equipment supplier. So it's the old MCC. So it's a business that is in the business of leasing out capital equipment to other people for contract mining, in addition to being a player in that industry as well. It was part of the Imperial Group, right? Imperial Group, but got spun off and listed on its own in 2008. It was one of the first moves that Hubert Brody and the team at Imperial did once Bill Lynch passed on, was to look at this business and say, listen, it's got a massive capital intensity because it owns this big fleet of equipment and it earns money on rental equipment and that sort of thing. So there you go. It's been on the market since 2008, so we'll see the share price in a little bit. Hasn't been all that fabulous, the share price performance, to be honest. Market cap 1.8 billion rand, price earnings ratio 5.5. So that tells you again also a little bit of ambivalence about how profitable or otherwise this company can be. I'm not sure about its dividend yield at current levels.
Yes.
Yeah, what else can we say?
So they had stronger performance in their last earnings review than the market expected. It had a massive jump on the e-liquid share price of about 17.8% on the day.
Okay.
The biggest concern here remains the fact that they are largely indebted. So when you consider their debt repayments, it actually makes up 64% of their profit before debt.
And why would that
payments.
be? I mean, is that in other words because the way this business basically works is that they finance the acquisition of capital equipment and then rent it out to contract miners? Yeah.
So if they've actually proposed a 250 million book build. Through a private placing, yes.
Capital raising, yeah.
So that'll definitely help them slightly on the debt side. But to be honest, they've got 7.9 billion rands of debt. So it's very expensive to refinance that all the time. If they keep on growing the business like they currently are, and they don't, take out any new debt, then this might kind of help them, and they might be a good sort of investment. I won't bank on that. It's very liquid share. Also, another positive for them is the fact that there's been a cautionary out since Feb. So there might be some
not
speculation.
A cautionary related to the capital raise,
No.
a cautionary related to who knows what, maybe a delisting as a possibility.
It seems like there might be some sort of deal on the table, and I see a lot of traders have actually taken a punt on this due to that.
Well, that's interesting because, as you say, sometimes that means there's an opportunity here that the regular public investor is sort of missing.
Yeah.
Let's have a look at the share price chart. So there you go, it's sort of bumbling around. I think it was at a higher level when it was spun off in 2008, but then let's wait and see. As far as that is concerned, 5 rands a share kind of gets up to around 8, almost 9, 9.5, but then has a nasty fall in 2014. And then at this low price, speculators and other cautionary watches and so on coming in. So that's the big jump of the 17-18% Mia is referring to, but it's off pretty depressed levels. So the overall view is still the same. As far as this stock is concerned, I'm going to feel hard to go hot on this on the occasion of sort of speculative, sort of possibles.
And, I mean, definitely the fact that you are managing the portfolio now as a longer term investment sort of portfolio, I don't think is suited. So I'd also go for not hot.
Okay, we're going to go not hot on that.